How's it going, guys? Welcome back to another Spectre video. In today's video we are covering a EURUSD sell setup that I took on Thursday of this week. So in the video we're going to be covering a clear, concise breakdown, and we're going to understand how you could have got involved using the exact same concepts that we teach. So here we are starting on the daily chart for EURUSD, and as you can see we have a very nice clear blank naked chart, nothing really going on. If we pay attention to the right, as always we like to pay attention to current price action, and we reference the left side for choice on liquidity, right? But if we currently reference price where it is trading currently, you can see we have traded inside of this inefficiency and we've created a swing high, then traded lower, running sell side liquidity and creating a swing low in the market before beginning to retrace. Now, if I put some annotations on the chart, what you can see is this becomes a lot more clearer, right? So now we have more context. So we have ran buy side liquidity, creating a long-term high before displacing lower. We have now traded back into the range inside of the fair value gap, rebalancing this inefficient price action before trading lower again, creating a new dealing range. Now from range high to range low, we have a premium and a discount, and you can see we are currently trading inside of the premium from this daily order block. So obviously we understand we are working inside of a premium and we are now moving into a discount, right? So for us, I understand that we are bearish. We should have a bearish narrative. So I want price to seek sell side liquidity. Now, what are the most obvious and clearest forms of sell side liquidity on this chart, right? I know some of you will be looking at this low straight away thinking we need to go for the swing low, but why can we not use these lows here, right? What I want you guys to think about is each one of these candles is a whole day. This is a very nice sell side liquidity pool, right? The previous day's low. This is more than enough to catch a nice intraday move. So we could be looking to target this previous day low, or perhaps even the low down here if price is moving very impulsive. Now, another thing I want to add is that we have had two small range days, right? You can see price is currently, on this day, I believe this was a Tuesday, we had a very small range, and then on the Wednesday we had a bank holiday, which is also a very small range, right? So we can expect a large range day going into Thursday or perhaps even Friday. Okay, so now that we understand all of that, let's go into the hourly chart and understand how this could be clearer. Okay, so here we are on the hourly chart. Now, I know a lot of you are going to recognize straight away that we are working within a market maker sell model framework. Now, if you do not know what a market maker model is, we do have plenty of videos on this topic. So go ahead and watch one of those videos and then feel free to come back. So as you can see, this is the current week, right? This original consolidation was made on a Monday, and throughout the beginning of the week we have traded higher. You can see price was very choppy going into Tuesday and Wednesday. As I did mention, those were small range days. Now, more specifically focusing on Wednesday was this whole area here. You can see a very sideways chop, nothing much going on. But going into Wednesday, you can see that the following day began the expansion, right? So we had a consolidation to a expansion being Thursday. Now Thursday created this range from range high to range low on the hourly, and coming into New York session, right? So apologies, this was London session distribution, right? London traded a lot lower impulsively, and then New York returns back into the range, into the premium, right? You can see we have a very nice premium fair value gap resting just above the range equilibrium, and we understand that our draw on liquidity could be a lot lower given that we have an original consolidation all the way here on the left. So with all of this in mind, we also understand that we have created a smart money divergence with GBP USD, right? So why is this a smart money divergence? Well, if you look at GU, you will understand that instead of creating a lower high right here, we created a higher high, right? So that qualifies as a smart money divergence. So that is also more confluence that we should trade lower. Now, this exact idea with this high was called in the academy, and I will add a screenshot for you right now. Okay, so as you can see, we did actually call this high. from this rejection block. I wasn't expecting this high to get run, so I was looking for sells from this area. So when I saw Thursday trade lower and then New York retracing back into the range, I thought this was a perfect opportunity to go and sell short. So just to clarify one more time, we understood the weekly profile, we understood there was extreme confluence with the smart money divergence, and we had an overall draw on liquidity lower. And then the final thing that we understood was that we came from a consolidation to an expansion. So the next thing we were expecting was a retracement and then another reversal to trade lower. Okay, great. Now let's head on to the execution time frame and understand how we could have got involved using the 5-minute chart. So here we are on the 5-minute chart. Now, just before we get started, I want you guys to know that this is currently trading inside of the hourly fair value gap, right, at this high. I just did not want to add onto the charts as it did look quite messy and unclear, but you can go and reference that on your trading view charts if you don't believe me. So as you can see here, we had a run on buy side liquidity beginning this market maker sell model, right? Now, I want you guys to pay attention to this candle's high, right? Because this was the hourly candle's high of the 6 a.m. candle. Okay, so at 7 a.m. the candle opens, the hourly candle, and we trade higher, running buy side liquidity, beginning the smart money reversal before trading lower. And that's where we have our change in state of delivery. This validates the order block for your first entry if you wanted to, and that is where you could have caught your low risk sell. Now, me personally, I'm not a big fan of catching the low risk sell. So if we're a bit more patient, you can see we had a nice displacement lower, creating a fair value gap. Now this would be the perfect place to sell if you wanted to catch the distribution, right? Sell limit at this candle's high, stop loss above the low risk sell, and your TP at the original consolidation lows. Now for me, I did just miss this, unfortunately, as I wasn't at the charts, but I was at the charts when this candle closed. So what I saw is that it's very likely we are going to run this low next. Now, if we do run this low with speed, I am expecting the original consolidation to go. So what I did was I set a sell stop order at this candle's low with my stop loss above the distribution high and take profit at the original consolidation. Now, if you look at the bottom right, you can see I have attached the chart of the dollar index. If you're wondering why I have done that, I want you to compare both charts. On the euro chart, it looks like we did not run the original consolidation, but if we look at the DXY, you can see we definitely did run it. So that is one reason why I had to manually close the trade at this level rather than holding it through and letting it reverse. And that is also a reason why I would recommend setting alerts for the dollar index chart whilst you're trading euro dollar. There are a lot of times where price runs a buy side liquidity pool on dollar, for example, but the euro does not do that, right? The euro does not run its corresponding sell side liquidity target, so I have to close the trade out manually. Okay, this will help you with, missing your draw on liquidity or missing targets and then getting caught up in a reversal, which nobody wants to see. Okay, great. Now this brings us to the final part of the video, the proof of execution. Okay, so here we are. Again, we have that 5-minute market maker sell model framework, but we've just cleared up the charts. We don't need the original annotations. So as you can see, this is the low I was referring to. I had a sell stop order just beneath this candle's low. I think we got filled a bit late due to a bit of broker manipulation. It doesn't look too bad on the right. So yeah, you can see what happened was I set an order here at this low, and as price traded through it, you can see it filled us into the trade, and then we ran there in almost one candle, right? One 5-minute candle. We had very quick distribution towards those sell side liquidity lows. Once again, I did have to close it manually, so you can see I didn't get to snipe the exact low. It was more than enough though, right? We managed to close in time before price began to reverse, and that was simply the execution, and there is the proof, right? So with all of that being said, thank you guys for watching the video. This does bring us to the end, unfortunately. If this video did help you, feel free to leave a like and comment down below how it helped you. If there was anything we can improve on, please let us know down below and we will ensure that for the next videos. Thank you for watching, and I will catch you guys in the next video.